All right, for more insight into China's housing market, we're joined by Susan Wachter. She is the finance professor of the Wharton School at the University of Pennsylvania. Susan, thank you for joining us.
My pleasure.
Susan, new home prices in China rose for a second month in a row. In June, they were up in 36 out of the 70 cities monitored. Are the government's actions of lowering interest rates and reducing reserve ratio requirements gaining traction? What are the factors behind the increases?
I would say yes. That plus the fundamentals, the continued growth of the overall economy, of course, is the key. But in addition, the easing of down payment requirements, the easing of tax regulations, and also very importantly, the lower interest rates, all are a positive for this market.
Well, what about the stock market? China's mainland stock market has been extremely volatile. Shanghai Comp is still off 23% from its June 12th high. Now, keeping in mind that over 75% of the market is made up of retail investors, what impact could this have on the housing market? Could the volatility in the market drive Chinese investors back into the housing market?
Yes, I do believe so. I think the volatility in the stock market may cause a shift to perceive safer assets. This is especially seen in the fact that the first-tier cities, the safer real estate markets, are in fact the ones that are seeing a major uptick.
Well, Susan, what about the losses, though, that investors have suffered? Around $3 trillion was wiped out. Do you think that that'll impact the housing market in the sense of people not having the funds to now go and buy houses?
Actually, I do not think so. I think that the potential funding out there is so large, and the shifts of the stock of funds into what is perceived as a safer bet for the long run is what's going to happen when there's increased volatility in the stock market. The move to safer assets is a shift of the fundamental wealth, not new wealth, but the entire wealth. I believe that's
all right. So
that's what, in part, is happening.
All right. So if it's a shift to a safer asset, if you will, are these home buyers more property investors then, or owner occupiers?
Well, it appears that they are both. There are certainly an increase in second homes likely from the easing of the down payment requirement. And in addition, the fact that new homes are selling, it both could be to second home buyers as well as to owner occupants. There clearly is a change in the momentum in the strong first-tier markets. That is,
and you mentioned the first-tier markets, but there is still a big discrepancy between those first-tier cities like Shenzhen and Shanghai, where there has been solid increases, and the lower-tier cities where prices are not only not increasing, they're still dropping. Is this a big concern, or is it just really normal for top cities, no matter where in the world you are, to just have significantly bigger demand?
It's both. It's absolutely a trend worldwide that top cities, first-tier cities, prime real estate is what is benefiting from lower interest rates. And the perception is, and it's correct, that the supply is limited of this real estate and the demand is increasing over time. The concern is that this rise in prices that we've seen this month, of course it may not persist, but this rise that we've seen this month is not all real estate, and that's probably going to continue. We're probably not, the rise in real estate prices in China, across China, we're probably not going to see that for some time.
All right, well, the People's Bank of China, as you mentioned, has cut the benchmark interest rate 4 times since November of last year and has reduced banks' reserve requirements ratios 3 times since February of this year. Do you anticipate more action from the government, and if so, what?
Right now, I think this turn in pricing, at least for the top-tier cities, will perhaps cause a pause to see what happens next month, to see whether this is a stable turn so that these policies can be stabilized going forward as well.
All right. Being careful of overstimulating there. All right. Thank you so much, Susan Wachter, finance professor of the Wharton School at the University of Pennsylvania.